Hi, and welcome back. Dormant funds. This is where we're going to leave off. Or take off, I don't know. This is where we left off, but this is where I'm going to start. This is how the day's going, okay? Gosh. Well, not everyone is in the room yet. Do you want me to make it special for you guys, and do you want to look at a picture of my baby? Okay. I think that's as good as we're going to get. His favorite place is the zoo. And so if you don't know that location, we're on the train. And my kid now makes the determination where we're going based off the amount of carousels that they have. So if there is one carousel, we definitely want to go. If there's no carousels, we don't want to go. That's why he didn't come with me, because he was like, no carousels. I'm not coming. And I was like, fair. But we go to the zoo probably every other week, and he now dictates how we do the zoo. He's obsessed with monkeys, specifically in this order. Gorillas. This is very important information, okay? Gorillas, gibbons. Yeah, gibbons, they have them. They make noises, and he can do the sound perfectly. Orangutans, and chimpanzees if they have them. He's like,
I'm sorry, but what noise does the gibbon make?
Okay. Turn that recording off. I'm just kidding. You don't have to turn it off. This is me and him at the zoo, okay? That's what they sound like. And then they go, okay. Now when you go and you hear them, that is exactly what they sound like. So we talk gibbon. Yes, I'm a very talented lady, okay? I had another mother once tell me, you were just so good with animal sounds, and I'm like, am I? Because I can't, there's a sound I make for a giraffe. I'm never going to make it for you guys, okay? Only for my child is that sound reserved, because it's not right. There's no way it's right, but there's an animal book that makes the sounds, and you have to listen to it. He then looks at you, like he'll make the sound and be like, do it. And I'm just like, if I have to, okay. But yeah, he's really cute. I like him. He hardly ever smiles for photos anymore, so that's why I wanted to show you guys this one. I will give you more photos, but we really need to talk about dormant funds, okay? It's important. So we'll say bye to baby Marshall, which he's not a baby anymore. He's 3. And he's very opinionated, is the nice way to put it, okay? Okay, dormant funds. We're back to the stuff, and most of you are back now. So, dormant funds. You guys have had a lot of questions on these lately, and I'm going to talk about this more on Friday when I talk about end-of-year processes, but I want you guys thinking about it because on Friday, I want someone to tell me what is their end-of-year process over dormant funds. You'll get nothing, but I want someone to tell me, okay? Just to enlighten me what your processes are. Because we've had a lot of questions about, hey, I haven't had any activity in this fund. What can I do with it? That's generally the question that we get the most. And so typically I have to follow up because you know how we love our questions. I have a question. Because should the fund really be closed out? Is there any revenue still going into the fund? And sometimes the answer is yes. There is revenue going into the fund. And I have to say, well, then is it dormant? Why aren't you using the fund? Then that leads to me asking, again, most of the time, these are sometimes 4,000 funds. So they're sometimes home-ruled funds that you guys inherited that maybe you stopped collecting money on, or you just have had it sitting there for a long time, or revenue keeps going in it, but you don't know what to use it for. My question is going to be, what does your ordinance say the money can be used for? Because again, if you still have revenue going into the fund, it's not necessarily dormant. You just need to spend the fund. You need to spend the fund down, okay? So if you're still collecting money on it, what is the use of the fund? That's what I'm always going to ask you guys. And then sometimes, because again, that goes back to where is the revenue coming from? Because sometimes you guys contact me and say, I don't know, it just goes there. And I'm like, well, what does the ordinance say? Why are you receiving money into that fund? So we always need to know the source of the fund, what it can be used for. Again, if it's really a dormant fund that's just sitting there and hasn't had revenue in let's say a crazy number, 10, 12 years, and it's just sitting there, and you have activity that goes back that far, and you're like, I don't even know anymore, then okay, let's talk about ways to get rid of that fund, because obviously you don't need it anymore. And so there are ways that you can close it out. And so if you guys, again, hint, it was in the September bulletin. We had an article on this, so dormant funds. These two statutes on there allow for how you can close out funds. So the first one, 36185, allows for any remaining or unrestricted balances of county fund collected through a levy on taxable county property to be moved to the county's general fund or rainy day fund, given council approval. So that's one way to close those out. Or 5-1-13-2 deals with the closing out of surplus bond proceeds, because sometimes, again, you guys have those bonds, there's surplus in there, how to close those funds out, okay? So that article goes real in depth. I try to put it all on one slide, but if you have more questions, I would urge you to read that bulletin article, okay? Any question on dormant funds? And again, if you guys don't know and you just want help trying to figure it out, send us an email. Again, it's not we answer that question a lot, but I'm just going to have questions for you. So the more information that you send me, if you send me the ordinance, that's always great, because I love reading ordinances. So I will read it and we'll be like, let's talk about it. So just more information, the better on that. I'm not going to spend a ton of time on capital asset tracking and reporting because I don't have time. What time are you supposed to start? 3? You're supposed to start at 3? No. 3:20. I have 6 minutes. Okay, give me my 6 minutes.
Fine.
Okay, I might have a little bit of time, but I'm going to talk about capital assets more. Did you read the September bulletin? This is a very good article that I would recommend you read, because tomorrow I'm going to present on repeat findings. There are tons of repeat findings on capital assets. If you feel like it, how many of you within the last audit cycle had a comment on capital assets? Okay, it's a very common comment, okay? That's why I'm okay with a show of hands. Because how many of you throughout your counties, how many of you auditors actually do the inventory of all your assets? Oh, none of you? I'm not surprised, okay? Okay, I'm not surprised. You guys probably delegate some of the responsibility to the departments to keep those inventory lists up to date, okay? So this bulletin article about capital asset tracking and reporting, it gives you, again, on this slide, it gives you how capital asset management is governed, what goes into how you take care of your capital assets. So there's some statutory authority. There's our uniform compliance guidelines, and then there's county ordinances that maybe beef up what our uniform compliance guidelines and statutory requirements are, okay? Because statute alludes to it, our uniform compliance guidelines tell you need to establish a policy with a capital asset threshold. You guys need to determine how frequently you're taking inventory of those assets. Uniform compliance guidelines say 2 years you need to do inventory. However, how many local policy says you will do asset inventory every single year? If you don't know that your policy says that, go back and read your policy. That's my first thing I would recommend to people that get this comment is, if you're new to office or you may need a refresher on your capital asset policy, go back and read it, okay? Because if your policy is more strict and you need to do inventory every single year, then that's what we're going to audit against, okay? If it says that inventory needs to be done every 2 years, That's what we're going to audit against, okay? We're going to look at the threshold that's set, look at your documentation, things like that. So again, the majority of the responsibility is for the primary responsibility is the auditor, okay? It's your guys' responsibility for reporting, getting everything, maintaining those records. Again, I have listed your duties. You guys know, you guys oversee all of this, okay? You oversee the reporting, you oversee the list, you make sure everything's put into Gateway correctly. However, if departments aren't providing you additions and deletions, can you do your job? Because you don't know. Again, if there's departments buying vehicles, they don't tell you that they bought vehicles. How do you know to add them? You don't know. You might know at the end of the year if they did the inventory, and then you'd be like, oh, well, that's new. Then you need to make sure that you have that documentation to increase those, okay? So, oh, sorry, I was on the wrong slide. Come on, guys, you're supposed to tell me, okay? Okay. The last piece I want to talk about, it goes to the responsibilities. So if you guys give additional responsibilities to the departments and you adopt local policies, like through the Board of Commissioners, that let's say the Sheriff's Department, they're going to maintain, track their assets, give you all the information, they're going to make sure it's inventoried, and they have all of this stuff to you by this certain date. That's great. But what internal controls do we have in place at the county level to make sure you're getting that information? Because you need to make sure that that inventory is done by the end of the year so that when you guys are filling out your annual financial report, that capital asset section is complete. Because without all of that, you don't know. So you just need to make sure that, again, depends on your county and where the responsibilities fall. I doubt I'm going to see any of you guys, one of you, just going out and inventorying all your assets. I'm not saying it's unheard of. The job would get done because I believe in you guys. However, I doubt you're going to go and inventory all the assets, okay? So you guys have to have something in place to make sure that that information is true and correct. The last slide I have is transfers, and I only have 1 minute to cover this. But the easiest thing is when you guys ask, can I transfer money from this fund to another fund? The question is, do you have statutory authority to do so? So when we say that, whatever fund you're transferring the money from, does it statutorily allow you to move that money out of that fund? If it does not, you can't transfer the money, okay? If statutorily it says you can transfer money from this fund to this fund, you can. That's what you're looking for statutory authority, okay? Statute is very clear. If it's silent, don't move the money. If it allows you to transfer the funds, how is it allowing you to transfer them and where can the money go, okay? And if you guys ever have questions, send us the email and say, can I transfer money from this fund to this fund? We will look it up and either say, yes, here's the statute. No statutory authority to do so. Easy peasy? And you guys want to listen to Ricky now? Yay! Okay, thanks guys. Ooh. Okay, there's the clicker. Do you need a pen?
Up here. Tell me I'm wrong. I left it on that table. Hi. It's been a minute since I haven't been up here all day, have I? Oh, goodness. So I have what, 40 minutes to finish out our day? All right. How many, I know I asked this earlier, but again, how many have already been through their audit process today or since then? Okay. And some are still waiting. I think they said they're going to get started on you. We're going to try and get everybody caught up this year. So I kind of wanted to touch base on it because We have a lot of new auditors. We don't necessarily talk about the process and what we actually do, right? You know that we come in and we ask you for a bunch of stuff, right? We do all of this work. We tell you when you've done something wrong or some sort of non-compliance issue. We don't necessarily say, hey, you did it right? But I wish we could. And then we meet with you, finalize everything, and we're gone. All right. But like, do you actually understand what we're doing and what that process is? So that's what I wanted to kind of cover today. As Stacy said, Paul couldn't be here, but this is slide number 2. Okay. Well, not that we're counting. So if you want to know anything more about him, it's on that slide. All right. So statute gives us the authority to come in and examine all the accounts, right? To give us the oversight, to make sure that all tax money that's flowing through, and I don't even want to just say tax money, let's say public funds, right? That's fees, that's fines, that's anything that comes into the county as their money. It gives us the authority to review all of those, right? To make sure that they are being spent in accordance with statutes, compliance guidelines, grant agreements, things like that. All right, so when we get started, and you guys will, it's only a few months away, you'll start working on your AFRs, right? Fun times, I know you're all excited about it, right? It's one of those that I can't stress enough. Don't wait until the last minute. There's a lot of information in there, so the sooner you start on your AFR, the better you are for it to get it in timely, right? Because we do need it in timely. The annual financial report is due 60 days at the end of the year, right? So this year it will be March 1st. I think it was last year is when that legislative change occurred. It used to be in statute. Statute used to actually say 60 days, and then they changed the statute to say we got to determine when it was due, and we just left it and put it in our uniform compliance guidelines, and so it still continues to be 60 days. You do all of that through Gateway, right? We do all of those reports and we enter them into it. We are going to talk about Gateway a little bit more tomorrow in some of the more high topic areas. All right, so the purpose behind our audit is to provide an opinion on your financial statements. But what does that mean, right? What we're looking for is, can somebody come in and rely on the financial information that you presented in your financial report? Is it, we can't say it's 100% accurate because we don't test it 100%. But do we think it's reliable? Do we think all the information is good, right? If we're going to do that, we're going to give you an unmodified opinion, which I always think sounds funny because we put the "un" in the front of it, right? It's unmodified, like it's not a good thing, but it is a good thing. That is the opinion you want, okay? That says these financial statements can be relied on. And that's important, especially if you have a bond rating that you're working on. That's an important thing. So again, that's your best one. There are a couple of modified opinions, and I won't go into huge detail about them, but you could have a qualified opinion. This isn't necessarily bad. It's just saying that there are certain parts that maybe we can't rely on for one reason or another, right? Maybe something has been missing or we can't verify something completely, okay? We will explain that inside the audit report so that everybody understands what area we are talking about. We could also issue an adverse opinion, which is not a good one. It just means basically these are bad, right? Do not rely on these at all. And we can also issue what's called a disclaimer. And a disclaimer is we can't issue an opinion. We don't have enough information to take a look at these financial statements and be able to say whether they're good or not good, okay? You don't see a whole lot of those. Most of the time at least from the counties, from what I've seen, you guys keep pretty good records, right? We're able to at least get the information that we need, and that's a really good plus. So along with that opinion that we give, we also audit for noncompliance, okay? Not compliance of everything. You know how many laws there are out there. We're not going to go through the whole statute and make sure that you're in compliance with every single one of them. But we do go through, and as GTAC, that's kind of part of our job. As legislative changes occur, we look to see what are the most important ones. What's going to affect your financial statement? Where would compliance be the most important, okay? And so we will pick those, and those are the kinds of things that we actually look for in our audit program. Now, we do a report of noncompliance, right? So that's in your supplemental audit report. It will go with your audit opinion, okay? It's a separate report that'll house any kind of noncompliance that we find. That noncompliance is also at a county broke down by department, right? So if it's something that falls on the auditor, you're going to have your own section in that report. But if it's something that falls on the sheriff or the clerk or the recorder, whoever, it will fall in their section. When we do this, we have the comments that are included in the supplemental are what we call audit results and comments, okay? These are reported comments, right? So you will see those. So anything that rises to that level will end up being in your supplemental report. So if you see, we call them ARCs. If you see an ARC, it's reportable, right? It means everybody's going to see it. It's in the public report. But we also do non-compliance management letters. Has anybody in here gotten a non-compliance management letter? Okay. So the difference is we are saying, okay, it doesn't rise to the level of a reportable comment. Okay, we're not going to put it in the public report, but it is significant enough that we need to discuss it with governance. Okay, so whoever it's on, so if it's on you as an auditor, we're going to bring it to the exit, we're going to show council, and we're going to show commissioners, because people need to be aware that this issue is occurring, but it goes no further. Okay. The other one we have is what we call a discussion only, and it is really just like it sounds. It is something very immaterial. It's a one-time thing that happened. It's small in nature, right? We found it. We can't ignore it, right? We have to say, we saw this, this wasn't right. Make sure you look at this. Maybe change your internal controls. Okay, but it doesn't rise to a level that we think governance needs to know, or it needs to be in a public report. We think it's an easy corrected thing, or maybe it was a one-off thing, right? And you've already corrected it. No matter what, we do look at those in the next audit. So any kind of noncompliance issue you have, no matter the level, will be reviewed in the next audit, okay? If it is not corrected in the next audit, it could rise to a level above it, right? So discussion only could come up to a noncompliance or an ARC, okay? We are going to talk about more federal finding stuff on Friday. Today is Wednesday, right? So Friday, we're going to go over findings, but if you are a federal, you qualify for a single audit, which is the federal audit, there's a separate report that comes out on that, okay? Any findings that we find, which would be a Section 2 or a Section 3 finding, will be included in that report. I don't really want to go down that rabbit hole for today, but on Thursday we will. I'll talk to you about what the differences are and common findings that we're seeing, okay? All right, so you should be familiar. Sorry, my clock on my computer, the computer says 4:29, and I was like, holy cow, that was quick. All right, so you guys should be familiar. You're going to come in and you're going to do an entrance conference, right? They'll come in, they'll set it with you, commissioners, council, you all sit down, you will talk it out. While they're there in the beginning of the audit, they are going to try to get an understanding of your county as an entity. So you should receive forms. Okay, I think they still come from Engagement Strategies, but I'm not 100% sure who sends those forms out anymore. So you should get a couple forms, and it's going to ask you basically about the internal control structure of the entity as a whole, of the county as a whole. Things you're going to fill out. Those are things that we need. We're going to use those to set up our audit plan. Right? Those help us like eliminate some testing. The better your controls are, the less testing we have to do. You have no controls in place, the more testing we have to do. Make sense? So we want to get an understanding. The good thing about this is you're an annual audit, so you should already have some of this stuff in place. There should just be minimal changes that you're changing from year to year on those forms. Okay? We also are going to get an understanding of internal control processes that are occurring, okay, within your office and throughout the county. As we gather all of that information, we have to create our audit plan based on that, right? We want to be efficient too, right? We don't want to come in and have to test everything if we don't have to, right? The better everything is, the faster we can get those audits, the less you have to pay for those audits, right? It takes down your cost, and the better report you could get. During that audit plan, we have to look at several things. There as a county, you have so many departments, right? Believe it or not, when I first came on, we audited every single department of a county. Every single one. When I first came on, I only ever did counties, and they would say, okay, you're on departments, and I would have to go every single department. That took cash, right? If you weren't having any money, we weren't going to look at you, right? But I mean your building departments, I'm grabbing their receipt books, I'm doing cash counts in there. We don't do any of that anymore. And to be honest, it's not effective for us to do that. How many departments, do you have actually? A lot. So we take a look at those that collect cash, and we have to do our own kind of risk assessment on those. Make a determination. What do we consider as material to your financial statements as we're going through this, and which ones are highest at risk, right? Most of the time, we're going to audit your big ones. Clerk almost always gets hit. Sheriff almost always gets there. You might have a tourism commission, so we might get them too as we're going through. We can look at, obviously, RDCs are kind of a department, although all their information runs through the auditor's office. So we might take a look at those. So we're going to make that determination, and then we're going to determine, what kind of risk assessment we have across the board. And when we say risk assessment, we've talked about that with you guys, right? You guys have to perform a risk assessment for internal controls. What risks do you have that something could go wrong, right? But we are going to perform a risk assessment on the audit plan to determine what's more risky areas that we really should focus on, okay? So as we do that and we prepare that, that is what helps us determine what our audit steps are, what we're going to audit. Right? Sometimes we can cycle things, right, as things get better and better, but it just makes us more efficient in that way. All right, so as we get through and we do all of that, we pull the annual financial report, right? So we talked about that. That's what you're going to enter into Gateway. We actually, and I'm going to say this is for regulatory units. If you are a GAAP unit, you are still required to do an AFR, right? You are required to submit it, but we don't audit the AFR as your financial statements. Right? They end up going and having a compiler normally. I think there's a couple here that still do it by hand, but get a compiler, they create GAAP financial statements, and that is what we audit. But we still audit for compliance with the AFR, right? Because you're required to submit that data. For the rest of you, we audit you under the regulatory basis, okay? And so we pull the information, or we run a macro with all the information you enter into Gateway, in which in May, I think it was, we showed how you could run that data, and you could see what your financial statements actually look like. You all have the capability to do that within your AFR as you log in. But we run that, and that is what we base your financial data on, right? We just put it in a format that we need for the regulatory basis. All right, so once we've kind of got our audit plan going, we know what your financial statements look like, we are going to get started, right? Most of the time, or I say most of the time, it's been a minute since I've been in the field, but when I was in the field, every county audit I did had at least 4 people on it, and we parsed information out, right? You're going to handle the cash. You're going to handle the receipts. You're going to start testing disbursements, okay? And so you might be seeing us coming from all different angles, right? Especially as the auditor, because you're right there. You are the fiscal officer. We're auditing what are considered your records and your information. So things that we're going to be looking for, we want to make sure that all transactions that have come through the county are posted to the ledger, right? Everything should be posted to the ledger. Everything that's posted to the ledger needs to be reported within the AFR. It needs to be timely, and it needs to be up to date, right? So that we're not hanging anything out. So we're going to look. When did that come in? Was it posted immediately when it came in? Or when it was dispersed out? Or was it dispersed out and we're holding something, which we shouldn't be, right? Everything is posted in that ledger, timely, and reported correctly on the AFR. Now, some of that would be for like your departments. You're obviously not going to be posting the sheriff's records to your departments, right? You don't post their commissary fund, but you do report their information that they give you from the supplemental AFR. Okay, so when we go to audit that, We will audit that supplemental AFR to what you reported, make sure that it's accurate. When we go to test whether or not all the transactions are included, we go to the sheriff's office. Okay? Anything that comes out that's an issue within their transactions is their issue. Okay? It doesn't fall back on the auditor because you have no control over those records, right? You only have control over what they reported to you. Okay? So that's important. That's one of the things that we do. As auditor, we want to make sure that you're reconciled to the treasurer. All right? Reconciliation to the treasurer is key. So as we're going through all of these things and we are, as we're doing the audit and we're doing cash, we always go over to the treasurer to see what kind of reconcilement they have, right? They've got a lot of reconcilements that they actually perform. But one of those reconcilements, where they have to start, is with you. So when you guys do, and I'm going to say Form 61, but I know that you use computer system forms, but you know what I'm talking about, right? Where it has all of your funds, your balance, your receipts, your disbursements, your ending balance. We want to know that you're reconciling every one of those columns to the treasurer's, okay? That's what we're looking for. The treasurer has to have that. That is what feeds into their cash book. If they can't reconcile with you and their cash book's off, there's a problem, right? And so they should start with you, and once they get reconciled with you, then they need to reconcile that amount to what they're using in their cash book, right? And then they carry on. So we're going to be looking for that. That's important because during the audit, we have your financial statements. At the end, we should be able to reconcile all the cash that's over in the treasurers and the sheriffs and the clerks to what's on your financial statements. Okay? So it's a big undertaking, but if you're doing that monthly, it makes our job a lot easier. We're also going to be pulling receipts, claims, and any other kinds of adjustments that you make. Right? You need to have all supporting documentation with all of that. So adjustments are really a good one because you should be able to justify why you made an adjustment, right? If you were doing a correction of error, that's the best thing. Sometimes correction errors look like transfers, don't they? I paid it from the wrong fund, so I'm gonna it looks like I'm moving it from this fund to that fund. When the truth is, I made an error and I posted it wrong. So you should be able, when you go to make that correction of error, say, okay, I posted claim 1100 to general fund, but it should have come out of lit public safety, right? And here's why, right? So we want to see that. There, again, a paper trail. Why did you make that correction of error? Supporting documentation for anything that you're doing within the ledger, right? A disbursement would have an invoice, a contract, some sort of agreement, something. And then, your receipts are going to be really whatever you get. Like you said, if you have an ACH, you're going to have that support. If it's a grant, you've entered into a grant agreement. So you'll have all of those things. We also are going to look through the AFR and make sure things are supported, such as Stacy was talking about capital assets, right? As you are the fiscal officer, it is your job to make sure that you report capital assets. Nobody else can report them, right? So if they're not all getting reported, it falls on you. What Stacy was saying about the policies is if you want to put a little bit back on your departments, you need to have a county policy that does so. Because if we come in and your sheriff has bought a truck out of commissary, you don't know about it, you didn't include it, we're going to write you up if there's no policy, because who's responsible for reporting? You are. But if you have a policy that says that sheriff is supposed to be submitting that to me and I never got that, right? I didn't know about it, then we can write them up and use that policy as our authority to do so. Okay? So it's important to think about that. So we're going to look for those capital assets being supported. We're also going to look for debt, right? So any debt payments that you're making, we're going to go through all of that debt, make sure that that's all supported. And then your accounts payable and receivable, okay? You have to enter information in here. I guess it could be possible that you would have zero, but you better be able to document why you have zero. Okay? Otherwise, you need to have a detail of what your accounts receivable are and what your accounts payable are at the end, because they're going to ask for it. Okay? Other records and stuff that we use First of all, we start with your gateway uploads. So whether it is your monthly uploads, which is your board minutes, your funds ledger, or the reconciliation of the 61, right? We're going to kind of start there. We'll pull also from the annual ones, your receipts, your disbursement, detail of activity, your annual funds ledger, salary ordinance, your vendor payroll history, all of that stuff you already upload. There is no need to provide that again if you have uploaded it. So if somebody asks you for it, you can say, I have already uploaded it. If it's not the report they want, then they need to be clear in what report they do need. Okay, you need to understand what you're looking for to provide to them. But Gateway is a tool for us to be able to be a little bit more efficient in our audits and to help you out. Because as I talked to somebody today and said, your job is a hard job. You have your fingers in just about every single thing in the county, right? There is never a time that you're probably sitting at your desk thinking, what am I going to do today? Right? Has that ever happened? Probably not. And so we know that you're busy. And when we come to do those audits, we have a job to do as well. You've got to provide us the information, but we want to work with you, right? We don't want to stand in the way of you getting stuff done that you have to get done. And Gateway does help us do that, right? So continue to upload as much as you can. We obviously will call it non-compliance if you don't. So we will look at those. We talked about vendor and payroll claims with the supporting documentation. So if we're pulling claims, make sure you've got all the invoices attached to them. Or if we pull one and it's a contract, we're going to need to see that contract, right? So every claim you make, there has to be an authority to make that payment, right? So what authority did you use to make the payment? That's the supporting documentation we're going to need. All right, so we also are going to look, as we talked earlier with the supporting schedules, we are going to want to see the supplemental AFRs. So what we tell the departments who fill these out is that they should be maintaining a copy too. So while you keep a copy of your AFR, you should put those supplementals in that file. All right, you should be able to pull those out and support, like, this is what was given to me, this is what I entered into the AFR. We should be able to go to that department and they should have a copy of their supplemental AFR, and they should have all the supporting information of how they came up with that AFR. Okay, so again, support is key here. Again, we're going to look for your capital assets ledger, right? What's the big ledger? We're going to probably test. Did you receive anything during the year? Did you dispose of anything in the year? We might go out to the departments too and check some of their inventory listings. And we're going to obviously look at your grant schedule. It's my favorite schedule. I know it's yours, right? We're going to look through all of those, and we're going to make sure that everything that needed to be reported properly on the CFA is done there. So anything supporting that you've got, right? As we've talked, if you have a grant file, right, with the grant agreements in it and any supporting documentation that you use to fill that out, that's very handy. Of course, I guess you have to get all the grant information first to do that, but we're trying, right? And again, we're going to be looking at internal controls, okay? Internal controls touch everything that you do. You know, you hear us talk about it over and over and over and over again, but remember, it helps you too, right? It puts a layer in there so that we make sure that not just fraud. I know that we all like to think it's just to protect us from fraud, but it's not. It also protects you from human error, right? If Sally transposes a couple numbers, is there something to catch that, right? Hopefully it's not just, when you're reconciling at the end of the year and you think, I've been off this like weird amount all this time and you got to go back, right? Something to find those things. Okay, how much time? I could talk forever on this, guys. All right, so internal controls, as we were talking, we're going to review your processes. We review the processes for the overall county when we're going through and we're looking at our risk assessment to do our audit plan. And as we start doing the audits for the localized areas, we're going to really dig into those individual processes. So we're going to look to see what have you implemented and does it work, right? Is there an issue there? We're going to identify what we consider to be key controls. All right, so the big thing that's supposed to catch. We will test your controls, to see if they have been implemented and are working correctly. And if they are not, we are going to report any deficiencies on that, okay? And we should explain it to you. As a thing is, we may not always find a deficiency when we're testing an internal control, right? We could test an internal control and it works 9 out of 10 times, right? And then we pick something else and we're going to look at the compliance part of it and it's, there's non-compliance here, right? If there's non-compliance, you have an internal control issue. Those two go in hand. You could have a control deficiency with no non-compliance, all right? But if you have non-compliance, you have a problem with your controls because you didn't catch the non-compliance. Do you see what I'm saying? All right, we kind of talked about this already. We are going to review all monthly reconcilements. So we'll start with the treasurer, right? They issue all of that stuff on Gateway. We're going to review any of the variances that come on. We're going to review the reconcilement with you, right? Like I said, this is a big process. We need in the end to know that what's on the financial statements reconciles to the cash that's held in the county. And that includes all departments, okay? So we do like multiple bank recs and then we have to pull it all together. Receipts and disbursements, while we're looking for all the supporting documentation, we're also looking for a few other things. Again, were they recorded timely? When the transaction occurred? So, when you issue a check, it should be recorded. When you receive money, it should be recorded. There should never be a pile of, checks over here that we'll just get to those later. Okay? We want to make sure that they get recorded immediately. We also check to see if they got recorded to the proper fund, right? So, as Stacy was talking about transfers, the reason we have fund accounting set up is so that every revenue source has its own home because it has its own use. When you start moving money around with no authority, you lose the identity of that, right? So if you put lit public safety into general fund, how can you tell me what you spent lit public safety dollars on? You can't, because you can't distinguish it between the general fund, which is why it's important that you understand you cannot move money from one fund to another without that authority, and we do audit for that, okay? Again, it's all about transparency. When you start commingling, you lose transparency. And again, I can't stress supporting documentation enough, right? There can never be too much supporting documentation, right? So if you are doing something and you don't have a paper thing, then write it down. What happened? Get what you can get. Some of it might just be, this is your determination on something. We tell recorders this every time. They want to use their perpetuation funds, right? They have to use it for the perpetuation of records. Write your determination down on your claim, right? You might have the invoice, but how does that meet that purpose? You may have to write it down. Keep it with the claim, all right? Those things all are important. When it comes to the AFR, so once we pull it and we make it into that beautiful financial report that we have, we start out looking at the beginning balances, right? We pull last year's audit report. Did your beginning balances agree with your last year's ending audit report balances, right? And if not, we're going to ask you why. Is there a possibility that they wouldn't agree for some reason? Actually, yes. Right? You could have a prior period adjustment that changes a balance. But we're going to have to talk about that. We're going to have a note disclosure because we need to be able to explain to the public why you had a shift in your balance in the general fund. Right? Why is your beginning balance different than what you ended with for the year? So we'll have that conversation. It can happen, but it doesn't happen very often. We again look through those transactions, make sure that they are accurately reflected throughout. So when we're testing all of the claims and we test them to the funds and then we test them to the financial statements, that's how we can see that they are fully represented. And we want to make sure that all activity within the financial statement is included. All activity. Okay, so there is no account that just sits over here that's off book and we're spending stuff out of it. It doesn't ever get reported or go through any kind of things. We just put this money over there, right? When it comes to the county, any money is the county's money, okay? There's never a time where there's this offshoot bank account that somebody, or there shouldn't be, somebody's writing checks out of and are not going through the proper process, okay? So just saying. All right, so we went through kind of the types of audit findings in the beginning when we talked about the different reports. But what I wanted to talk about here is what these different kind of findings could be. So when we talk about a deficiency in internal control, number one thing that we see is segregation of duties. That's why you always hear us talk about it. Only one person was involved in the process from start to finish, right? That is an internal control deficiency. So you're going to see that one. That's one of our main ones. But remember, you can have a deficiency if your operations are just really not running right? You're not on time with anything, everything is off, you're not reporting properly or timely, or it's not accurate information, and you're not in compliance with laws and statutes and regulations, okay? So if any of those things occur, then you have an internal control deficiency, because your internal controls are supposed to govern those things. Those are supposed to help those things so that you can catch them in the long run. When we look for noncompliance, we're looking at that against several things. State statutes, number one, right? Statute tells us a lot of things, and that's what we have to follow, but it doesn't tell us everything. So we have uniform compliance guidelines that come in there and fill those gaps, right? So we're going to audit against statute first, and then we're going to audit against the compliance guidelines. But then even sometimes local policies will come into play, like the capital asset one, right? So if the departments are doing it and then they're not doing their job, they should be held accountable because they're not following the policy, right? So we'll audit against that as well. And then we have the special grant requirements. So when you, the county, I say you, but I mean the county, enters into a grant agreement to take money, whether it's federal, state, or local, you are saying, we will do X, Y, and Z for these dollars. We will audit against that. What are the allowabilities of that grant agreement? If we find any issues with those things, again, that could be a non-compliance finding, right? That might rise to the level of an audit result and comment, or maybe a non-compliance management letter. I'm going to make it. Okay. So when we have an internal control deficiency, how do we address that? So we've always talked about internal controls and them being like winding gears, right? They're constantly moving, they're constantly evolving. So if you have one, the first thing to do is to understand what that deficiency is. So when you're sitting in that exit conference or that field examiner says, you've got a deficiency here, this is your time to ask the questions if you don't understand what it means. How do you fix it if you don't understand it? Okay, so make sure that they clarify that. Once you understand that this deficiency caused this problem, then you need to go back and figure out, how do we fix it? And you'll modify your controls accordingly. I'm not going to go through these because we do it all the time, but it's probably going to affect one of these components. Okay, so when you have a control deficiency, where did it happen? Most of the time it happens in control activities within the processes, but not always, right? Sometimes it could be monitoring. Sometimes it's your information that you're receiving isn't accurate. You don't have a control in place to make sure that that's correct. So take a look at the 5 components, get familiar with them, and then address it from there. I am going to we talked about risk assessment a little bit from an audit standpoint, but from your side, when you get a control deficiency, that's the first place to start. So there's a deficiency. So now you need to perform a risk assessment. Okay, you already know that this has happened. What other risks are out there? You set goals for your processes. What do you expect this process to do, right? Then you need to look at it and you need to identify what could cause this to go wrong. What would make it so I can't reach that goal, right? That doesn't happen. Once you do that and you're comparing all of that, you're going to formulate a plan to address it, right? How do I fix it? How do I move forward? But you also have to determine your risk tolerance, okay? And so by that it means if you think something, you've got this tolerance over here where you think, I know that could be risky, but I'm willing to accept that risk that nothing's going to happen, okay? You need to document that's there. I'm not saying it prevents you from getting another deficiency, right? But Internal controls are big and in depth, and they hit every process. And so sometimes we can't get as detailed with every single process that goes within your department. You try, right? But take a look at what it is that you're actually looking. And if you have questions about it, Stacy or I, or even Lori, will be more than happy to have an internal control conversation with you about it, okay? The other part of internal controls and the way that, you can help to prevent getting a deficiency is monitoring it. So you've put all these things in place, but are you actually watching the process play out, right? You're looking to see what is coming out of that performance over time, right? Are you getting everything you need to get? Is something like getting lost in the shuffle, right? You are also ensuring that any of your audit findings are resolved very quickly, right? You're not holding it off and waiting until the next audit in hopes it'll go away, right? Chances are it's just going to compound the issue. It's also important that you do internal reviews and reports and look at those and make adjustments accordingly, right? And then just know that monitoring should be ongoing all the time, right? It's not every single day, but maybe you have a monthly time where you're like, okay, I'm going to look through this process. I'm going to watch this process and see, can I see anything, anywhere it could be improved, okay? Okay. So if you have a non-compliance finding, there's a couple things that we need to do here. First of all, we need to get a resolution for it, right? So you need to understand it. Again, this is one of those things. Once the field examiner comes up to you and says, hey, I found this non-compliance, if you don't understand the non-compliance, you have to ask the questions. You should be able to understand it, and they need to be able to explain it to you, okay? How do you fix it if you don't get it, right? And some of these things are very complicated, and sometimes it's a communication thing, right? I mean, we've all been around people who kind of talk way up here, right? And we don't understand what they're saying. And so it's okay to say, I need you to come back to the table and explain to me exactly what's wrong. And you can keep saying that over and over again until you get it, okay? You can also reach out if you're still having an issue and it's just not happening. They have audit managers and audit coordinators that'll sit down with you and help get that communication on so that you can fix it, because everybody wants you to fix it. Once you understand the problem, then again, it's just take corrective action, right? What can you do to fix it so that doesn't happen again, okay? All right, so in the audit wrap-up, this is where the field comes to you and they should tell you everything that they found within your department before the exit. You should never be walking into an exit conference and not knowing what they're going to say about your department. You probably won't know what the others, because the exit conference is for you to find out, right? But for your department, you should know, okay? If you are in an exit conference and you're like, what? You never told me that? Then we've got a communication problem, okay? So our field is told, you have to tell them before exit. It's an ongoing conversation, right? You really should know as they're going through the testing of it, and they'll tell you what they find. When we're doing that, we will also go through the financial report and then let you know what opinion we'll be issuing on that financial statement, right? Again, best is for an unmodified. And we'll kind of go through the supplemental report. We'll talk about any findings listed, again, by department. We'll give you, I'm just going to skip forward here. We will give you a chance to issue an official response. Okay, this is done normally 10 days after the exit. You have to have it in. This official response will become part of the public report. So it's optional. You don't have to do it. You don't have to say anything. You just move on. But if you want to, you do have the option to do that. And you may be given a corrective action plan. Okay. This is important, and I'm going to specify a little bit here, and I'll do more on Friday. There are 2 different corrective action plans, okay? So one is a corrective action plan for federal findings. That's what we're going to talk about on Friday, okay, and what the difference is. By the time your exit comes, those should already be completed You shouldn't have any of those that we're talking about at the exit conference. We have the corrective action plans in our hands as we're sitting down talking to you at the exit. Okay? Those are just different than what these are. These corrective action plans are what is required when you have a repeat audit result and comment in the supplemental report. These are not your federal findings. These are your non-compliance issues in your supplemental report, right? So at the audit, or at the exit conference, they've told you what happened, what your findings are. They are going to notify you and tell you which ones are repeats if you have any, okay? If you have a repeat, you should be receiving some information at the exit conference. You should be getting templates, instructions of how you're going to respond to that. You have 10 days to respond, okay? You can get more time if you absolutely need it. And you also you're supposed to have 6 months to implement this plan. Again, you can have a little bit more time if you need it. There are some times to implement something, it's going to take a little bit longer. In these cases, you have to communicate with what we call our CAP team, okay? They're the ones that are going to be communicating with you after the audit. You're going to submit it to our CAP team. They're going to look through it. You need to let them know if you need more time. Have the conversation with them. Once they receive it, they're going to review it and either approve it or disapprove it. Okay, so if it doesn't have what it needs or what it's required to have, you are going to get an email that says this is not an approved corrective action plan, okay? Now saying that, if you get one of those and you don't understand why, that's when you're gonna call Stacy and I, okay? So that we can look through it and see, all right? We'll help you get that corrective action plan in the way it needs to be so you can move forward and get it turned in. Once you have an approved corrective action plan, you're going to report when the implementation has been completed, right? We did everything we said we were going to do, and we are done. You'll report that to the CAP team. Hey, we've got that implemented. And then we are going to follow up, okay, in the next audit to make sure you did everything that you said you did, all right? These corrective action plans, we cannot stress how important they are. When you have repeat comments that go from one report to 1 year to another year, okay, that's when it becomes a repeat. When we get these corrective action plans and we move forward, we have to create a report for the audit subcommittee, okay, at the legislature. And Paul and the board go and stand in front of them and have to kind of explain some of these, right? They review all of your repeat findings to see what's going on. It's important. We don't want to do that, right? I mean, and they identify everybody. So they're going to tell what county you are. They all broadcast. So it's, we would like to see those minimized, okay? I didn't make the time, but I'm almost done, I promise. Okay, the last thing I want to talk about is audit reports. So once everything is done, everything is turned in, typically I think we say about 45 days. I don't think that's changed from the time they exit to the time it's a public report. Once it becomes a public report, it gets posted on our website. So if you ever want to look at your public audit report, I mean, you'll be sent it, but you can always look at past years if you want to see what somebody did before you took office. So we have that whole database there together. The one thing that we get most of the time from our departments, such as your sheriffs and your clerks, they can never find their office in there. And we have to say, because you're the county, right? We don't audit you as a separate entity, you are the county. So if they ask you about the audit, you might want to show them here or direct them and explain to them that they're incorporated into the county audit, okay? And they won't have their own separate thing. All right, that was a lot. I went 5 minutes over, but I blame Stacy because she didn't get through hers. Do you have any questions about any of this? Or are we just ready for dinner? Okay. Deb, is there anything that you need to announce before we release these people? They can't hear you. Okay, so she said there's nothing really to announce, but if you have any questions, to let her know. I look forward to seeing you guys tomorrow, and enjoy tonight. Have fun. Thank you.